Today I put this very dramatic post up. Ripple beats the SEC in court, and then Congress comes riding in to cook Ripple and likely secure safety for Ethereum. It's not that dire, to be honest with you. This bill that just passed Congress, I think it's got a lot of great things in it. There's only one thing I absolutely hate. We'll get into that briefly. And I think there's one aspect of the bill that is actually really good, but it'll be quite challenging for Ripple. They're going to be able to deal with it. They'll have to reorganize some stuff, retool. It's not going to be easy. There's, one thing, part of this bill that's going to be challenging, but they'll get it done, I think, eventually. And in general, it'll be better for XRP and it'll be better for crypto at large. So again, there's only one aspect of this bill that I absolutely hate at this point in time. We see FIT21, the bill that passed Congress today. The first part that caught my eye is crypto issuers would need to file quarterly certification and reports. And I saw a lot of people online saying Ripple's not an issuer. They were gifted the XRP. You can read Mark Fagel, former SEC director, what he has to say about that term issuer. But Ripple be an issuer. Cardano Foundation, Ethereum Foundation, like these would all be issuers. And so they're going to have to file detailed updates about the blockchain systems, financial information, risk factors. So really, Ripple's a leader here. They do quarterly reports, but a lot of times they're somewhat on the marketing side. They're telling you all the good stuff. These reports will be different. You'd have to give a lot of risk factors. Some of the information maybe you don't want to tell the public, but you have to. Very similar to a company's quarterly reports. Development plans. So you just can't make a bunch of wild claims. You have to detail out what those plans are. And any material changes from the last report that was issued. I think this is really going to give investors access to reliable information. We always say do your own research. How do you do that when you can't rely on anything that people say out there? This is going to bring this asset class into the modern era, one that real investors can start dipping their toes in and making significant allocation of capital. The exact quote here is the issuer must submit quarterly reports detailing the current state and timeline for development, funds raised and spent, and any material changes with information certified as true and correct. So very serious reports. They'll have to make sure they're accurate, and we'll get to look behind the curtain and really see what's going on. That way these crypto companies, they don't have more information than us, the investor. We should be on an even playing field. And that's probably the part of this bill that excites me the most. And whatever the final version that goes through, I think we will see that in it, which is great. Now, this is the part that I think is going to be really, really challenging for Ripple. It's going to be tough how to figure this out, but crypto issuers and their affiliates, so that would be like Ripple executives, things like that, cannot own more than 20% of the asset supply. This ensures decentralization of asset ownership and influence over the market. So when we look at, Chris Larson has 4 or 5%, Arthur Britto has 4 or 5%, Ripple has billions and billions of XRP. How are they going to split this up in a meaningful way? Now, the good thing is this. When you look at the escrow, it's not the whole escrow that they would count in there. It would just be the next 12 months of escrow release. When you add that up, plus what they're holding, you can't go over that 20% margin. This could be problematic for XRP investors, though. If Ripple is really forced to ensure they pick up the pace on their selling, it could lead to a lot more XRP flooding into the market. I think one way they could alleviate this is giving some of their XRP holdings to a foundation to go out there and promote value and promote building. And further, I would like to see them, rather than to airdrop to holders, because when people get free money, they're more incentivized just to dump it on the market, or burning the supply. I don't think is a great use of that XRP. I would like to see them have some incentives in the network for people that run validators and things of this nature. We'll see what they do. They're going to have to really redesign this in a big way if it goes through and becomes final, if that 20% stipulation sticks in there. But I think it's a good idea anyway, because yes, we want the network to be decentralized, which the XRP ledger is, but also you don't want one person, one entity holding this much of the supply. It creates a lot of problems. And I think if they can divest down to this level, the XRP they have left and the XRP we have will be immensely more valuable, because that is a huge risk. And when you strip that away, I think XRP has a much brighter future. And we see the exact quote here: no digital asset issuer or affiliate person beneficially owned in aggregate. That's the key. So you're going to add up Chris, Arthur, Jed. Jed doesn't have anymore, but you know what I mean. You add everyone up and Ripple the company, and it can't be 20% or more of the total. Now, this is the part about what I said, the escrow. It can't be freely transferable or otherwise used or available to be used. And I believe it's for 12 months. So that would kind of help them. They can stuff some money away in that escrow. They don't have to count it in that 20% total. And, it gives them more leeway here, maybe divest over time. So they don't have to do one, big run at this thing and allocate those coins right away. They have a lot of options here. They'll have to think deeply on these issues, but I think they'll get it right. And I like an XRP ledger with Ripple having a lot of incentive, a lot of XRP to continue building out this use case, but not so much of it. Bring that down to a more reasonable level, and I think XRP will be immensely more valuable. So that's actually a good thing, at least for us, I believe. And then the last part here is the bad. What is the bad of this? What is the part that I really hate? And it's what happens for the everyday investor. The bill as it stands limits non-accredited investors to 10% of their individual annual income or net worth. Once again, the regular guy is the big loser of this type of thing. It's kind of like where regular investors are blocked out of private equity. And who knows, down the road, they might say, well, you can buy these top crypto assets, but you can't buy any of the more emerging assets, much like we see with private companies. Could happen. Again, they just start boxing you out of those investments. And that's what we see happening here. For the people that either make enough money to be accredited or got into crypto early, and so their net worths have grown quite a bit, they'll be fine. But for the everyday person that wants to continue investing in this space, that wants to jump in, they're going to be limited. And that's a shame. It's not supposed to be financial freedom just for the wealthy or just for the people that have a lot of assets. It should be for everyone. And I just don't like the government telling people what to do. Like, you can only put 10% of your money into crypto. Might actually be a good level to cap it at. Might be a great suggestion, if you will. But for the government to dictate you have to do that, that's where my problem is in a big way. You work for your money. You work hard for it. If you want to buy magical coins on the internet, I don't believe it's any of the government's business what you do. Let me know what you think down below. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.